Hi there, welcome to Neppy Invest. You have questions, and I try to answer those questions, sometimes not successfully, but I am doing the best I can, and hopefully, you're getting something out of my answers and my replies. So let's get stuck into it because I am still falling a little bit behind. 3 weeks ago, Method 341 wrote, they did the dirty on MMA Offshore, which is MRM ticker code. I sold out for a 200% gain. Well done. But it could have been a lot more. Yes, it could have been a lot more. I'll be spewing if someone lobs a bid at $3 for the company. They haven't. They upped the bid by 10 cents from 260 to 270. And I actually was a little bit relieved about that because I did actually sell out as well. And when they actually went into training hold, I thought, oh no, this is going to be a significant increase to the bid, but it wasn't. It was a 10 cent. And I'm pretty sure shareholders are pretty disappointed with that. And I think quite a few others have sold out. And in fact, here it is, MMA Offshore. In fact, you can see that by the chart. There was no big jump in the share price when they put in this increased offer. So, yeah, unfortunately, I think that is the end for MMA Offshore on the ASX. I did hear a similar company is listing on the ASX or already has listed on the ASX, so that's interesting. Taking the place of MMA Offshore. It has been a good run. I bought way back here. Yeah, it was way back in February 2022 at about 50 cents or just below 50 cents. That was my initial position. And then I traded a few times. I should have just held on to that position and it would have been a five bagger if I did that. Anyway, so we're all disappointed about that. Yes, just like you, method 341. Safe Ali JB2BB says, please make more videos of Novonix Limited. Thank you. That's what I think NVX is, unless there's another company with the name NVX, which I doubt it. So let's have a look at the chart for Novonix. I'm not going to talk about what they do because the chart looks horrendous at the moment. So share price of Novonix way back in 2021 had a high of about $12.50. Now it's 70 cents. A high quality company doesn't do that. And the chart still looks negative. There's no reason for me to get excited. I was getting a little bit interested back in March and April. I thought, oh, it is starting to look interesting here. We saw a bit of an increase in volume, but that interest died away and the volume has started to slip back. Not quite as low as what we saw towards the end of last year into the start of this year, but and the share price hasn't got to the lows we saw back in February, but still not looking positive for Novonix, but there is a potential. Eventually, the share price for this company will break out. So I am following the chart for this company alongside many other companies that are in the lithium space quite closely, including Pilbara, which looks really ugly. I had a look at Pilbara this morning and ugh, it's many lithium companies charts look pretty ugly. And the reason why I was thinking Pilbara looks pretty ugly is just broke through the last lows we saw back in December. Share price now at $3. In fact, the share price has dropped it's fallen over $1. So it's fallen about 25 to 30% in the last 2 months. In fact, less than 2 months. Now, that's all I'm going to talk about when it comes to Novonix at this point in time, because I don't consider it to be a high quality company. In fact, very small revenues. I would actually assume, and I am going to have a little bit of a closer look at Novonix. I don't care what they do at all, because this is more of a story stock than anything else. And so when it comes to a story stock, it's all about the sentiment among the investors and traders. And at the moment, the sentiment in Novonix is not that good. If they became a real company and had growing revenues and had profit growing as well, that's when I would say this company is becoming more interesting and possibly even a long-term trade or even a long-term hold. But they're not there yet. And the reason I say they're not there yet, and even though they might have potential, maybe they do have potential. And the reason I say they're not there yet is let's have a look at the most recent Appendix 4C. And they should release their current quarters, the March, what quarter is it? The June quarter Appendix 4C within the next 2 weeks, I'm assuming, because they released this on the 17th of April. So that was 17th of July is in 11 days' time. Anyway, so let's have a look at this company's appendix 4C. And yeah, $2.1 million receipts and operating cash flow negative by 13.2 million, burning through a lot of cash. So, and even then, the markup of this company, I'm assuming it's something like 400 million. 400 million, how? Yeah, 344.75 million. So still a really high markup. So if this company doesn't prove itself to the market, there is a lot to fall when it comes to the markup, the share price of this company. So they have to prove themselves, and there's still a little bit of premium in this company's valuation, even though the share price has fallen from $12 to 70.5 cents just because of that valuation. They have to prove themselves to the market. And that's the main thing about story stocks. Prove themselves, prove their business model, prove that they can become a real business. And I would say the majority of those story stocks never make it in the end. Doesn't mean Novonix won't, but history is not on its side. So let's have a look at another company. 9 Slide Glide says aftermarket announcement by Vita Life Sciences. I think I talked about this one. Revenue profits continue to march upwards in this underappreciated small cap with an enviable long-term track record. Thank you, 9 Slide Glide. So if I haven't talked about it, I'm going to talk about it right now. And the chart did look good. Yes, chart still looks good. But yeah, I'd say there is a bit of illiquidity around this company. If you do have a look at the weekly chart, a nice weekly uptrend since 2020. Share price has risen from about 60 cents to 220, so a nice fallback over that period of time. But if you look at the longer term, although that goes back to 2001, 2002, so this company must have listed in 2017, according to this chart. Even though TradingView has a chart going back to 2001 or 2002, there was a 15-year gap there. And that's one thing I don't like about TradingView is they just merge charts of two completely separate companies just because they have the same ticker code. So if you do go to look at the chart from 2017, when they listed, the chart does look good, particularly from 2020. Now, underappreciated, this company is profitable, generating cash, unlike Novonix. And so let's have a look at FinChart just to see the history, the financial history of this company. And to be honest with you, I haven't taken a real close look at this company, and that maybe is to my detriment. So Vita Life Sciences, market 123.88 million. So significantly lower than Novonix, yet the revenue of this company has grown at 16.85% per year over the last 3 years. Over the last 5 years, 12.5% per year. That's exactly what I'm looking for. The company has a dividend yield of 4.1%, PE ratio of 13.25. Doesn't seem too high. EV to EBITDA 8.1. Price to free cash flow of 10.1. What else can we look at? Return on equity 21.1. Everything looks good. Margins, gross margins 58%. Enterprise value of 99.57. So according to that, they have net cash. And let's just have a look at the revenue growth. So nice revenue growth, particularly over the last 3 or 4 years. So yeah, maybe it is a bit of a detriment that I have not had a closer look at this company, because everything I've seen, this is a very quick look at the company financial state. Everything I'm looking at here looks pretty good. So yeah, and chart looks pretty good. There was a nice little dip back here, during 2022. And probably the last thing I'm going to look at is just liquidity of this company. There's a lot of buyers and sellers, trade history. There's trading, it seems like, every single day. That's not Novonix. That's probably why. So let's have a look at the summary again. Okay, so only 3 sellers, actually 5 sellers, and not a lot of buyers either. So, and you can see the difference between the first buyer and the first seller is like 23 cents. So there will be a little bit of volatility here. So if you really need to sell your shares in this company, you have to sell down the share price. The share price will fall. In the trade history, seems like there is trading most days, if not all days. But some of the days, the trading is quite small. 3 shares traded on the 3rd of July. One share traded on the 19th of June. Now, I am not concerned about that, but if you do listen to Aussie Decor, they always go on about lobster pots, and you should never invest in companies that you can't sell out of. That's ridiculous, in my opinion. That's true if you're a fund manager, but it's not true if you're an individual investor, particularly if you believe the long-term thematic of a company. If you believe in the long term of the company, you don't care if it's liquidity. You're just going to take a position in that company. And hopefully, over a 5 or 10 year period, the liquidity will improve if the company keeps on growing. Perfect example of that is Supply Network over the last 5 years. In fact, have a look at the Supply Network chart. You'll be able to see a significant improvement in liquidity in this company as the share price increases. And more fund managers discover this company. So if we go back, in fact, that's a daily chart or weekly chart. If we go look at the daily chart, so right now it's nice liquidity in this company. That looks fine. But if you go back further enough, he's starting to see signs of illiquidity. This is just 2 years ago, 2022. If you go back further, oh, look at that, 2020. That is definitely signs of illiquidity. This is the telltale sign of a liquidly traded company. Share price just these one-day candlesticks. I don't know how to describe it. It's just all over the place. But just look how just look at it. Compare that to now. There's more order. That's probably the way. There's more order. It's not chaotic. Anyway, so thank you for that. But Vita Life Sciences does look interesting, I must admit. Okay, we're getting to my birthday. Yeah. So thank you, agent. All these people who wrote happy birthday. Thank you. Casanar 8. Demerix is such a good story, especially for people suffering a kidney disease. And then for me, the comparison with neuropharmaceuticals is rather compelling. Demerix was actually mentioned on Ausbie's The Core episode I just listened to, and both presenters had no idea what the company does, no idea about anything. They said it's a complete sell because no revenue over the past 10 years or something. I think one of them actually said that. I just had a look at the history, no revenue in the past 10 years. But that's understandable. That particular person, I think it was Mark Morland, what's it called? Invest Smart, or what that's called? No, Team Invest. They look at the they look at the past. They don't look at the future, and that's an okay way to invest because they're looking at certainty or more probability. So they look at the history, but because they look at the history of a company, they should not even talk about companies where it's all about the future, because Demerix is all about the future. Now, there's still uncertainty. It is more of a speculative stock, but you just can't look at the past of Demerix and say, well, they've never done anything in the past, so that means they won't do anything in the future. That's just not the way, in my opinion. You need to look at a company like this. It's all about the future. Sure, there's more risk to it, but the returns for a company like Demerix will simply, if they make it, will simply dwarf the returns of those companies that have already made it and are growing at nice rates. But return of Demerix could be significant if they keep succeeding. That's why we invest in companies like that. That's why we trade in companies like that, because the returns can be significant. Okay. Andra Santel, I'm curious if you could do analysis on Nuix regarding how the ASIC pending decision could affect the share price. Any idea when will be a decision? Thanks, and happy birthday again. Okay, let's have a look at Nuix and ASIC pending. I don't really care about the ASIC pending decision. And to be honest with you, it's not affecting the share price at all, is it? I'm not even sure when it's going to happen. Let's go back to 1 year. Let's have a look at. I'm trying to find the most recent announcement in regards to it. Resolution of legal proceedings. That's not it, is it? No, that's not it. Commencement of federal court hearing. Is this it? Yep, that's it. Okay. Wasn't even marked price sensitive. Yeah, it wasn't even marked price sensitive. Okay. So they haven't. This hasn't been resolved yet, and this might have an insignificant material effect on the company. It may be nothing. I don't really base any of my decisions on these sort of. Here it is. ASIC concludes share trading investigation. Okay, cool. Again, it's not market price sensitive, which sort of may be understandable. Did a response really released on another. And I think it's it. Well, I just have no idea when this is going to conclude because there's nothing been released since then. Has there? Okay, so no idea when it comes to Nuix and that particular ASIC pending decision. But I would not base any of my decisions on that because we just don't know. Now, in saying we just don't know, the market doesn't like uncertainty. But when it comes to Nuix, it doesn't matter. So let's have a look at the chart. And the other thing is, the company released a really good earnings update on the 17th of May. This was a really good trading update. And at this point in time, that's what the market is focused on. The really good trading update seems like the company is moving in the right direction. Now, this particular ASIC proceedings could be a little bit of a road bump, but not much of a road bump at this point in time based off how the market is reacting. And we know that just by looking at the chart. The chart tells all. So this is the chart for Nuix, and it's an absolutely gorgeous looking chart. And yeah, for some reason, the share price rose quite well in the past week. Share price up 13.3% in the past week, the first week of the new financial year. I'm not complaining because I'm trading this company right now. And again, my initial position in this company, just like MMA Offshore, was way back in July of last year, so almost 1 year ago, when I bought some shares at just over $1, and then I traded it. I should have just held on because this would be almost a fallback since then. And there was no actually, looking at this chart, there was actually no reason to take profits in Nuix at all during the last year. So at this point in time, I'm trading Nuix. I don't really care about this ASIC. Might have a short term when it comes out, the results or the decision comes out. It might have a very short term impact, but at this point in time, I don't think it's really affecting Nuix, and the market's not that concerned. Now, the market can be wrong. Fishball, happy birthday. You're welcome. Happy birthday, nice. Not that it's your birthday. Not sure of my rock star, but I'll take that. Thank you, Moot Heart Steve. Probably pronounce that, Terry. Mutadistarif. I should refrain from trying to pronounce some of your names. Thank you, Veroso, and Terracasson, and Stephen Harrison, and George VV50K, and Shelley Dugball. And so someone has a question here. Thomas Caraff, and what are we talking about? I'm holding off investing until the merger goes ahead. I do believe the healthcare sector will prevail, especially with Chemist Warehouse. Okay, so this is Chemist Warehouse and Sigma Healthcare. When will there be an outcome of the ACC? Again, I don't know. I have no idea. It could be, I mean, this could be months and months. I have no idea. Do they mention it all in the most recent announcement? Okay, the ACCC anticipates making a final decision on the 5th of September 2024. However, this timeline can change. And yeah, so 5th of September, we're talking about 2 months from now, from when I'm recording this video. So the decision is a long way away when it comes to Sigma Healthcare and Chemist Warehouse. It's really funny because Sigma Healthcare, as a standalone company, is a low quality. It is a low quality. Chemist Warehouse, of what I've read and seen of that company, is a burgeoning quasi high quality company. So combine the two, and I think Chemist Warehouse would be a really good company to invest in. That's why the share price has really taken off. But if this particular merger, it's a takeover, in my opinion, it's a takeover. If this particular merger doesn't go through, share price of Sigma Healthcare will collapse. It will collapse without doubt because Sigma Healthcare, ew, who wants that, to be honest with you? But maybe there is value even at these prices if the merger does go through. But I'm There's just the slightest risk. Too much risk right now, but if it does go through, I'd say the share price will rally. Yeah. Thank you, Thomas Carafa. Thank you for covering corporate travel management. You're welcome, Chef's Circle. That Showbiz says, thanks for your coverage, very educational. Could you have a look at SVR? Thanks. I'm pretty sure I did that in the previous video. Didn't I? SVR? I'm pretty sure. Thank you for the dub answer. Appreciate it. You're welcome. Thank you for your hard work and enthusiasm. Okay. Sekaharia. I invested in perennial microcap fund in 2021 and my invested amount is 50% loss. Similarly, I invested in Hyperion Oz Growth Fund and it yielded 2% return. What an opportunity waste. I will never invest in ASX. US markets are the best. My China funds is in huge loss, but my India funds is in big profit, offsetting the loss in China fund. Whatever floats your boat, but why are you investing in funds? I don't understand that. That's just me. You can do really well if you don't invest in funds and you know what companies you're investing in. So I don't know anything about perennial microcap or Hyperion. I don't know anything about those two fund managers. But again, don't judge the ASX because of those two fund managers. Now, but on the other side of the coin, the best quality companies in the world are in America right now. That's the simple facts. You can't find that facts. And I'd say the best quality company in Australia on the ASX is nowhere near the best quality companies in America. It's unfortunate in a way, but that's the way the world is working right now. And one of the reasons behind that is the Americans really encourage innovation, and a lot of people who want to innovate are drawn to United States and Australia. And the way we have set up a lot of our things, we don't encourage innovation. Even CSIRO, a lot of innovation comes through that. We don't really encourage it all that much. That's just the way it is. You can just see that by the dividends, how we treat dividends. Australians love their dividends, but dividends actually suppress innovation. And that's why a lot of American companies have very low dividends, because if you don't pay out a lot of your cash generation in your operations and you use that for research and development to increase innovation in your company, you are going to grow significantly instead of giving that money back to shareholders. But Australian companies love to give their money they make back to shareholders, which actually does suppress innovation. So we have this mindset of, it's all about income, not innovation. And I think, in my opinion, this is just my opinion, education should be free. And we should, even from as young as 5 years old, 6 years old, we should really encourage innovation. Really encourage it. It's very important. I don't think we do it enough. Just like I think we should have mandatory financial. I was watching someone react to The Big Short. This person was reacting to The Big Short, and they were so confused. They hated the movie because they didn't understand any terminology. I was like, oh, this is why you should actually watch this movie. It should be taught in schools, that movie, The Big Short. And the whole reason why there's so many people out there who just don't have the educational, when it comes to financial education, is because the government don't want people to know stuff like that. They want people to spend. And if you have financial education, you're more likely not to spend. Sort of like if you teach people sex education, they're more likely than not going to have children out of wedlock, have surprise children. It's just a fact. In the United States, those deep South states who really suppress sex education have the highest rates of teen pregnancies because of the lack of sex education. So what happens when you have a lack of financial education? People just don't know. Anyway, bit of a rant there. Dice says, what do you think about ABB? Not that interested in chart. Oh, okay. So I'm a shareholder of Aussie Broadband. and the chart looks pretty ugly right now, and I'm still hold of Aussie Broadband. So it's more of a longer term hold. And I think I'm not a biggest fan of, I don't care about customer relations. Don't care about whatever you call it. If you call up Aussie Broadband and they've got someone who knows what they're talking about speaking to you, but some people are really attracted to that sort of thing. I don't care about that sort of thing. What do they call that? Customer relay. I don't know what they call that. I don't care about that thing. But apparently they have a really good reputation in regards to that, and they are quite popular. Now they did lose that Origin thing, but that's, I think, is just a blip. And Aussie Broadband, in my opinion, is best placed for significant growth over the next 5 to 10 years in the telco space. So I think there is significant potential growth for Aussie Broadband. Potential at this point in time. Okay, TASD 5673 FBR, which is that bricklaying thingy. Yeah, that bricklaying thingy. Automated bricklaying. House 3D bricklaying. They're heading offshore to Dubai. Okay. Is that a question? FBR did, funny enough, FBR did come on my radar, my 3-month high screener today. And you can see why. Yeah. And actually, no, it wasn't my three-month high screener. Actually, it might have been that. Yeah, it was that. But it also hit my crossover, where the 200-day moving average crosses over the 50-day moving average. And for some reason, a really good run up in the share price the last 3 days. Share price has gone from 2.5 cents to 3.2 cents. So it doesn't seem like all that much, but that's a 25% rise in share price in 3 trading days on really good volume too. So the volume has increased as well. I don't think the company has released anything, but I could be wrong. No, nothing. So this is just, it's noise. There could be some loose lips out there, but just noise. But you can't dismiss 3 consecutive days like this. Could be just a trade thing, a play thing for traders. I don't know. FBR. What they called? They were called something else before FBR. They had a different name. See if Mark Index might say it. No, they don't. I'm pretty sure they were called something else. And what I'm going to do is I'm going to go all the way back to the start. No, I can't do that because this company was something else back in 2006. It's probably irrelevant. Fastbrick Robotics, that's what it was called. Fastbrick Robotics. I actually do like that name, prefer that name. Fastbrick Robotics raises $35 million in November 2017. Okay, Fastbrick Robotics. Okay, Big Boy Baby says or asks, do you believe technical analysis is effective on indices considering it's the underlying components that move the price? Actually, I do believe it's effective. And I have heard stories about people just selling a lot back in 2008 based off the indices, and people believing just based off the indices that we're moving into a bear market. Yeah, so I don't. If you look at the XJO, I mean it's pretty obvious. So right now, the Nasdaq is really bullish. So let's have a look at the Nasdaq. That's bullish. This is the daily chart for the Nasdaq. It's bullish. So you want to be vested in the tech companies in America. So in fact, when I did to my companies out of 30 at a 3-month high, I'll just do it here. So this is companies at a 3-month high. I'll go to United States, and this is ranked by market cap. So we have Microsoft, Apple, Google, Amazon or Alphabet, Amazon, Meta, Tesla, Walmart, Oracle, Costco, Netflix, Adobe, a company called Arm Holdings. These are huge companies, all at 3-month high. If you have a look at all these charts, beautiful uptrends of all these companies. Maybe not beautiful uptrends, not as good as the Nasdaq. Definitely Microsoft is beautiful. That's a beautiful uptrend. Apple, not quite so, because they had a little bit of a dip. Google, pretty sure I had no. Google's beautiful as well. Amazon, beautiful. Anyway, so yeah, I do think you can look at the indices charts and say, okay, this is where I should be invested more. For instance, if you have a look at small caps Australia, it's nowhere near as beautiful, as pretty. Really, it's just been going sideways over the past few years. Yeah, so small caps is not the place to be right now. So I think you can use the indices. And if we start to see, for instance, a small ordinary starting to move into a really nice uptrend, maybe that's the time to start putting more money in small caps on the ASX. Just like you can use the commodities charts like gold. Gold's looking okay. Copper's had a couple of really good days. Copper's had a couple of really good days. A nice little bounce. Oil, yeah, oil looks a little bit better. Yeah, so I do think you can look at the indices, yeah, I think it's effective. So yeah, let's go back to Nasdaq. Maybe it was the Dow Jones. Maybe it was the S&P 500, and we'll go all the way back to 2008. I've not looked at this in the past. We can see all the crosses, bulls, and this is why you should be invested for the long term. Okay, so let's see if you're just using the indices. So yeah, it was the S&P 500 was a beautiful uptrend. Nothing too concerning. There was a few moments in here each and every year where it looked like, maybe it was starting to move into a downtrend, but there was actually no sell point. There was no sell point. So the buy point for the S&P 500 was June 2003, and the sell point for the S&P 500 was in January 2008. So there's a 5-year period where there was no significant sell signal, and the sell signal was near the top, not quite the top. It was near the top, and then the buy signal coming out of the big bear market was actually in August 2009, which was a little bit later than I'd want, but that was the signal to start thinking about. There was a few false signals back in 2010. There was a little bit of a sell signal here, but you would have got back in at the same price not that long after. Yeah, I think it can work. You could definitely use technical analysis for indices. That's what I think, but I don't do it just yet. So it's more of a just by looking at S&P 500, it's more of the long term. And you can just see there, you would have been long the S&P 500 for a 5-year period from 2003 to 2008. So I think it's overall sentiment you can use it. But, if you look at the XJO for the same period, do we get the same signals? So let's go back to 2000. It's more choppy, looks like. No, same thing. This is the XJO. In fact, the buy XJO was almost identical. So June 2003, and the sell was January 2008. And look at that beautiful bull run, beautiful bull market. And then you sold here. You would have been fairly bearish. There's a couple of nice little bear market rallies, and then you buy back in August 2009. Yeah, very similar. And again, they had a couple of false signals here. There was a little bit of a ugly period here, but yeah. So the bull markets since then have been nothing like 2003 to 2008, have they? Nothing like that period. What are indicators on your charts? I'm pretty sure I've answered that, so I will try to provide you a link to the video I did. Michael Vass says, hi, Nepster, what's the best way to search for companies with 3-month highs? So I just do TradingView. So let's go to TradingView. There's a stock screener, and I've got my own screener called 3-month high. If you go to filters, if you look at filters, there's a lot of filters here, and there's you'll see a new all-time high, new 50-week 2 high, current trading day, new 6-month low, new 1-month high. new all-time low, new 52-week low, new 6-month high, new 3-month low, new 1-month low. So if you want to look at companies at a 6-month high, you can do that, or a 52-week high, you can do that, or maybe a 6-month low, you can do that as well. So many filters for your screeners in TradingView. That's all I've done. That's my screener. Very simple screener. I think, yeah, I've only got that for this particular screener. Some of my other screeners are a little bit more complicated than that, but that's how you do a screener. Very simple. Thank you, Michael Bass. Liam Jones asks, whoops, I guess I got South 32 mixed up there. Thanks for the response. I should have looked up straight to ACDC to compare. I sort of remember that. You remember that, yes. Pilbara Minerals is or was the highest shortest stock on the ASX. And there is a way to know this, by the way. What's it called? Shortman, I think it's called. Shortman. Shortman, the top shortest stocks on the ASX. Pilbara Minerals. Oh, look at it. Oh, jeez. 21. It's by far the most shortest stock on the ASX. Which means when it turns, sentiment turns, share price is going to rally a lot. So IDP Education, second, which sort of understandable, because that is, their performance is highly influenced by government regulations, and I hate companies like that. Liontown Resources is third. Flight Center, sort of odd. Sierra Resources, quite a few mining companies here. Chalice Mining, Australian Clinical Labs, I could have sort of understand that. Westgold, Sayona, Linus Rare Earth, Strike Energy, Weebit Nano, definitely understand that. Helios, just like Australian Clinical Labs. Surprise Cettire is not more. Genesis, maybe they've closed down some of their shorts. And if you can actually click on any of these, surprise web chat is there, or Nanosonics. So if you just click on Cettire, you can see, the shorts have really increased from 2% to 8% of shares in the last few months. Okay. So thank you, Thomas. No, thank you, Carflish. Pilbara is by far the most shorted stock on the ASX, which could be a benefit in the long run. Don't forget, and maybe I've actually have mentioned this a few times. I bought JB Hi-Fi in 2011 or 12 when it was the most shorted stock on the ASX because everyone thought Amazon was going to destroy that company. And I thought it was really cheap because every single time I went past a JB Hi-Fi store, there was full of people. And I bought it at $6 or something like that. Something ridiculous like that. Let's have a look at the chart for JB Hi-Fi. You'll be able to see where I bought it. I forget exactly when. It was many, many years ago. Many years ago. I didn't hold it all the way through. I should have. It was 2012. Look at that. Share price of this company went from $22 all the way down to $8. I thought it was maybe $6. And I bought it somewhere here, 2012. I didn't have a look at the chart. I just went, oh, this company looks really cheap, really good. It was hated, most short stock. And the buy point, if I look at the chart, I would have bought it, just looking at this, I would have bought it probably, there was a breakout. I reckon this company, on the 11th of February, they would have released their results, and the share price rallied 17% on that day. That was the breakout. This is a classic breakout. Look at that breakout. A beautiful breakout on the day. Share price rallied just before it, loose lips. Really good volume coming in as well. And that was, look at that. Look what it turned into. Beautiful. So I would have been holding the company at that point in time, and I probably missed the half year report. I probably didn't care. Didn't look at the chart. I was a different investor back then. And I just went, oh, share price has gone on a big run. I should take profits. And I took profits. I think I took profits when it doubled. So I took profits somewhere in there. Didn't hold it for very long. And I should just maintain holding. Although share price actually dipped a fair bit in 2014. Anyway. Yeah, it was the most shorted stock on the ASX back then. Thomas Karafar. Hi, any updates on Sigma Healthcare and Chemist Warehouse merger? I think I've already mentioned that. So September. That's the latest, September. Kirat Singh, belated happy birthday. Sounds like you had a wonderful day. I didn't. Well, I'm not a big anniversary person. I don't really care about holidays or birthday. Actually, I did. So my parents are up. That's right. Yeah, actually, we went out to lunch. We're going to go out to dinner, but we went out to lunch instead because I don't like people, don't like crowds. And this would have been on a Friday, and I wanted to go to this restaurant in South Bank. Just too many people, and I thought there wouldn't be many people at a restaurant at about. So what I like to do is not to go at lunch or dinner. I like to go in between, sort of like a dunch. You tend to find much fewer people at that point in time. So we went at about 2:30 or something, and it was still a lot of people. And I was like, it's just me. Funny enough, individually, I like everyone. This is like a paradox. Individually, I like everyone. I don't dislike anyone I meet. Individually, I like everyone, but collectively, I just don't like people. Collectively, as a whole. Alistair James, thanks, Neppy. You're welcome. Don't know what I did. Oh, Big River. Yeah, Big River. I'm doing less and less standalone videos. I just don't like. I prefer these videos, answer reply videos, and the ASIC Daily Rundown videos over these standalone videos. So you notice I'm doing less and less of those videos. Nice00742, thanks for the 3-month high explanation. Any review on Camplify? Seems to be all-time low. So this was 17th of June. And I had a look at the chart of this company not that long ago, CHL. And chart looks pretty brutal, to be honest. Should be frank. Chart looks brutal. Brutal. I'm listening to the chart. A lot of volatility in there. So I'd say there's a lot of people like you think, oh, share price looks, well, the company looks pretty cheap at these levels. But there's a lot of negative sentiment in this company. And I wouldn't even be trading a bounce. And the share price is at an all-time low. I just don't know which way the share price is going to go from here. It could go, this could be the bottom, or it could go significantly lower from here. So I just don't like these as much as, say, it looked pretty promising back in January, didn't it? Looked like it was trying to move into an uptrend. That uptrend failed, and you had to get out straight away. So not probably what you want to hear, but yeah, I'd be on the sidelines right now when it comes to Camplify. Luxie, hope you're well. I am well. Would love to hear your thoughts on IMB, Intelligent Monitoring Group. They recently acquired a few security system businesses, which the aspiration of becoming the premier player in Australia and New Zealand in this industry. Majority of the float is owned by a director and heavyweight in the financial industry, Peter Keenan, ex-MMA Offshore. There you go. Their thesis is that 5% of homes in Australia have security systems compared to roughly 20% in the US, and this will change. It could change, it could not. Chart is also beginning to look interesting. I actually would have to admit the chart looks more than interesting when it comes to Intelligent Monitoring Group. I do have one slight problem with this company. And let's have a look at the chart first. The chart looks way more than interesting, by the way. In fact, the share price just popped up on Friday. The breakout happened back in October at 22 cents. Share price is now 50 cents. Share price is now at a long-term high. Chart looks really good, doesn't it? I think this chart looks really good. So let's get to my one problem with this company. And when it comes to the chart, I should keep my problems aside. Problems don't matter when it comes to a chart. The chart looks good. Chart looks good. And that's it. Chart looks good. So my one problem, if I was a fundamental analysis or trader or investor, not a trader, investor, would be debt. Now, maybe they've changed, but this company had a lot of debt last time I looked. Maybe it's changed. So let's go have a look at the half-year report. Now, there's a chance that debt could significantly decrease as they become more and more successful. So let's have a look at their financials. Not profitable in the last half year. That doesn't necessarily not necessarily a bad thing. So revenue of 55 million. You notice massive increase in revenue. That's because of these acquisitions. Really acquisitive, and that's probably another red flag I have. They were not profitable this particular half year, but again, that's not necessarily a bad thing. Here we go to the balance sheet. So slightly positive when it comes to equity. They were negative last year. Borrowing, $75 million of borrowings. So $75 million of borrowings, and the markup of this company, I'm assuming it's about $100 million. Intelligent monitoring systems, $150 million, which means the enterprise value of this company is like $225 million. So there is a lot of expectations built into the share price of this company right now. So it's really just the debt I have. Yeah, I'm not sure, but the market does like the story behind this company. And if I was just looking at the chart, I like this. I like this company. In fact, what I'd probably do is if you just draw a line here, or even a box, this is a resistance area, and it's just gone through that resistance area on strength. This is a breakout. I'm calling this now. Intelligent Monitoring Group is a breakout. Breakout of the day. Good volume coming as well. I'm going to put this. I'm going to talk about more about Intelligent Monitoring Group in my video tomorrow. My technical analysis video. This is a breakout. I'm calling it. I'm going to keep my bias aside. It's got too much debt. And I might actually take a sneaky trading position in this company. Thank you, Luxy. Yeah, the rest of what you talked about there. This is just me trading it. It doesn't, all this other stuff, the debt, I'm going to push that aside. But yeah, the chart looks really good right now. Anderson 6379. Don't worry about any rambling. We're here for it. Thank you. Good humor therein, and you throw extra insights. A lot of lessons come from when you're sharing thoughts ad hoc. Well, I hope that's true. I don't know. With DRR, you mentioned the dividend yield. But okay. Trent Howard, this is very important when it comes to DRR, which is Deterra. Deterra? I hope I got that right. I mean, Deterra Robotics, yeah. Oh, yeah. I'm going to do a standalone video on Deterra. I've been meaning to do it for a while now. Why I bought Deterra. Should I do it now? Yes, I'll do it now. So with Deterra, you mentioned dividend yield, but as part of the acquisition, they have flagged a change of dividend payout strategy. Post next dividend plan to only pay 50% of profit going forward. So would expect dividend yield to fall. That's not absolutely true. This is why I want to do a standalone video. That's actually not true. So I'm going to do a standalone video on this. Look at the wording. The wording is very important here. Their payout strategy will not be 50%. And I'll just mention it right here. I'll just show you the wording. And this is one of the reasons why I actually did take a position, because I do think the market has overreacted. And I'll talk about it. Yeah. So dividend policy adjustment payout ratio, 13th of June. So you have to look at the wording. This is very important. So here it is. So they maintain the dividend payout ratio of 100% for the financial year 24. For subsequent periods, the Deterra board is targeting a minimum dividend payout ratio of 50%. Minimum 50%. That's not the target payout ratio. It's a minimum payout ratio subject to balance sheet management and anticipated investment requirements, franked to the extent possible. There is a possibility the payout ratio will be 100%. It's minimum 50. And in fact, I prefer the management of a company like this doing this. It gives them more flexibility to grow the company in the future. So don't expect 50% payout ratio every single year. It could be 100% some years when they realize, well, there's no opportunities to make any acquisitions or anything like that to pay down the balance sheet. So we're going to give 100% of the dividends back to the shareholders. So the most important wording there is targeting a minimum dividend payout ratio of 50%. It could be 100% most years. And I think a lot of investors saw that and went, oh, the dividend yield is going to collapse. Oh, I've got to sell out. And I think the market is overreacting. There's a chance the next few years could be 100%. We just don't know. So I actually do like the way the company has moving. Now, there's another reason why I bought. In fact, I'm not going to do a standalone video now because, so that's the first reason I bought. And there's another reason I bought the Deterra. Okay, so the dividend yield could still be pretty good. Now, even if they do a 50%, the company could actually grow because of this acquisition, and the dividend won't actually decrease all that much. Now, there's a second reason why I took a position, and then how it comes to do with this, or this purple box. Okay, so you could say this is what happens when a company just pays out 100% payout ratio. Share price is not going to move anyway because they're not growing. They have no capacity to grow because they're giving all the money they make back to the shareholders, so they can't grow. So that's one of the reasons why I like 50% payout ratio. Possibly, it just gives them, or this change in philosophy, it gives the manager more flexibility moving forward to grow the company. And in fact, if they do it successfully, the chart will look significantly differently in 10 years. In fact, you'll see the share price actually growing. And that's one of the things I do look for is capital growth. But the second reason is, look where the share price has moved into, this purple box. Purple box is a really good buy position for the Terra, and that purple box is below $4. So if it gets to about 370, which it did back in 2021, that's even better. Now, the share price of the Terra will move. And the other thing, this acquisition is they are diversifying. I like that because the share price of this company is going to move right now in the direction of iron ore because I believe their royalties are with BHP, which is iron ore. And yeah. Now, so what I did, I thought I bought it just above $4, but I bought it $4. I was a little bit surprised when I went to Superhero and I saw that I bought it $4. I thought, oh, wait there, I thought I bought it more. But I bought it $4. So that was my buy price. Share price has fallen below $4 briefly. But if you have a look at the daily chart, you'll notice whenever the share price falls into this purple zone, you get a lot of buying, particularly when the share price gets below $3.90. Not $3.90, below $4. A lot of buying comes in. We'll say below 3, yeah, a lot of buying comes in. The share price has now moved above and is at 414. So that's the two reasons why I bought the Terra. I think the market has overreacted. It's a minimum payout ratio. It's not set in stone. 50% is not set in stone. Share price is in a really good support zone. And my expectations moving forward is a potential capital gain from $4 of 30%. So I do expect eventually share price of this company to get back above $5. So that's a 25% gain plus dividends. So if I get that 30% increase in share price in 1 year plus dividends, I'm going to get a return of 35 to 40% in 1 year. I think that can happen. It's not an absolute, but I think that can happen. So thank you for that question. It's a really good question. But again, I think it's just the wording. You have to look at the wording. Do you still hold Frontier? So Jay Lank says, do you still hold Frontier Digital Ventures? I do. Oh. I'm interested to hear your thoughts on the company as it seems to have fallen out of a 2-year uptrend. Yes, since the end of May and now consolidating what appears to be a zone of price support. And the fact, even though this was 2 weeks ago, you're absolutely right, Jay Lanks. So let's have a look at FDV. And this is on my sell lists. And because it's not a high quality company, I've been holding it for a longer term. Share price was in a really long-term downtrend. So if I was trading this, I would have sold it somewhere in February 2022. And it's pretty obvious that was the start of the downtrend. And it looked like it was trying to move into an uptrend in March of this year. And that uptrend has come to an end. But it's at a very important level right now. In fact, as I speak, it's a very important level. 41.5 cents is really important because that's the lows we saw back in February. So if we see the share price drop to say 40 cents, that would be really negative. But I am going to sell this because this is on an uptrend right now. And this is one of my companies in my small cap portfolio that there's no trend at all. In fact, it's more of a downtrend. But I think because it's support, I don't want to sell it right now. I think this would be bad timing if I sold Frontier Digital Ventures at the current share price, just because I think there can be a bounce, particularly if the company releases a really good quarterly report. If they release one, I have a feeling they're not releasing one. I have a feeling, yeah, they don't have to release Penny's 4Cs anymore. I could be wrong, but somehow I remember they released a quarterly royalty revenue update in late January, released the results in February, and just an operational review in March. I'm looking at the wrong company. Jeez. That's the terror. It's been a bad day. Hasn't really. They released a trading update. Yeah, first quarter. So not a Penny's 4C. I believe this is not a Penny's 4C. And if we go back further, quarterly cash flow report in January. And there it is. Relief from quarterly reporting 29th of February. So we won't get a quarterly report from the company. Hopefully we will get an update from Frontier Digital Ventures. Yeah, because the share price right now is a very important level, very important support level for the company. I'm just very disappointed. Share price has dropped from 63 cents down to 41 cents. So a 33% drop in share price on no news flow. It's just sentiment, just noise at this point in time. Yeah, anyway, thank you, Jay Lennox. Dredge says, Droneshield had a good day. I'm up 365% so far on this stock. Good for you. It's been an awesome ride. I did buy some DOC stock at 6.5 after review. And having a look myself, I'm 9.92% up. Early morning stock I bothered is EQX. I don't know anything about EQX. Oh, that's New York Stock Exchange. I won't look at that. Bought in under $4.50. DOC. Let's have a look at DOC again. DOC Care Anywhere. Chart is starting. This is starting to look pretty okay. Share price is consolidating. You can see the merging of all the moving averages. That's a good sign. That's a sign of decreasing volatility. And typically when you see decreasing volatility, eventually it's just going to explode. But which way it goes, we just don't know. And we're seeing that with DOC Care Anyway. You can just see. And the share price has gone sideways for almost 2 years. I'm not joking. Share price of this company has gone sideways for 2 years. This is a long-term consolidation period. And if the company releases anything really good, the share price is going to explode. That's what I'm going to say right now. Share price is going to explode. So what you could do is just take a position right now on expectations that's going to happen. But yeah, the chart. Oh, I'm going to put this onto I've already got it in my Bye Bye Australia. This watch list I have, Bye Bye Australia watch list, is just companies. The charts, these are charts I look at every single day. And this is a chart I look at every single day. And in this particular watch list, I have 71 charts. The more I look at it, I go, oh, this is looking really intriguing. If you put in Bollinger Bands, so some people look at Bollinger Bands. So if you look at Bollinger Bands, I might not be able to put it in. Yeah, I've got too many thingies. But if you look at the Bollinger Bands, you see a squeeze in the Bollinger Bands. That's a sign of decreasing volatility, and then eventually you see volatility explode. That's one of the reasons I love consolidation periods, because eventually that consolidation comes to an end. And the reason why consolidation periods are really powerful is because if you're a shareholder of this company, just think, you bought some shares in this company back in 2021 at $1. You saw the share price drop all the way down to, what's the share price? 7 cents. So the share price got to 7 cents back in October 2022. And you go, oh, as soon as the share price gets back up to 30 cents, I'm going to sell. I don't care if it's a loss, I'm going to sell. I just can't handle it anymore. I'm losing my mind. And then you just see the share price go sideways. Go sideways, go sideways, go sideways. No significant rally. We did see a little bit of a rally, but nothing too much. Went to 8 cents, that's about it. So no big rally. Share price goes going sideways. You go, oh, so bored. So bored. Oh, there's an opportunity cost. I could sell my shares in this company in DOC Anywhere and then buy some other shares in another company. And during the last 2 years, many of the shareholders who bought this company at much higher prices have sold out because they're bored. They've become bored. Share price is doing nothing. It's going sideways. So what you have done in the last few years, you've done, there's been a complete refresh of shareholders. So if you look at the registry right now compared to the registry back in 2021, completely new registry. Maybe not among the top 10 holders, whatever, they could be the same. Maybe there's a lot of insider ownership. Yeah. Maybe some fund managers have maintained their position and they're not selling. But a lot of the other shareholders, the retail shareholders, they've sold by now. That's what I'm saying. That's what I'm thinking. It will be a very strong, emotionally well-adjusted shareholder to have held on for 2 years, share price going sideways, when they're in the red for a long time, not to have sold out by now. So I'm saying this is why this is starting to look really good, because they've sold out. And this is just waiting to pop up. Doc anywhere. So thank you, Dredge, for that, Doc. 6.5 cents. So you're up. Yeah. Thoughts on ABG? I'm trying to think what ABG is. ABG. Abacus Group. Oh, this is like a REIT. They spun off, didn't they? They spun off something. I have no thoughts on Abacus Group. Zero. I have zero thoughts on Abacus Group. They spun off the what do you call the storage? I probably prefer storage. I have no idea what this company, what real estate they're in. I have no idea. Preliminary portfolio valuation update. Let's see what they say here. I started to look at REITs 2 years ago, just as a way to learn more about the REIT space, expecting eventually we're going to see a bounce in REITs. That was almost 2 years ago. We haven't seen a bounce since. 5 investment properties, office and retail. Ew, I don't like office, don't like retail. Net tangible assets of circa 15 cents per what? That's not right. So mostly office. I'm just looking at the half-year presentation. And I'm pretty sure they spun out this storage, and I forget what that storage is called now. Portfolio, 21 assets, office retail. And they spun out, here it is, ASK. 19.8% shareholding in ASK. I'd probably be more interested in Abacus Storage King. And to be honest, that's just me. I think that's more resilient than Office. And the chart looks nothing either. Anyway, do I have this in my REIT? Yeah, I have this in my IPO. I'm going to put this in my REIT. In fact, it's called, there it is, REIT. Other than that, I have no opinions on REITs right now. The charts don't look anything good. Who knows what's going to happen with interest rates? If interest rates keep on rising, who knows? Maybe they will. REITs are going to feel lots of pain. Hi, Neppy, great work. How many companies do you hold? Many. I have, how many do I have in my quality portfolio? I have 25 to 30. So, remember they say you should only hold, they say you should only own 20 to 25 companies in your portfolio. And there are reasons they say that. And one of the reasons they say that is if you have more, then you're over diversified. But that's only true if you only own really big companies. And if we're talking about the Australian market, they're assuming you're only owning companies within the ASX 50. And yeah, if you're way too diversified, if you own more than that, you should own an ETF. But many of my companies are really small companies. And technically, because I'm not going to count my trading stocks. So if you get rid of my training stocks and now my small caps because they're now my trading portfolio. Yeah, I own about 25 to 30 companies. I think the last time I looked was about 25. We'll say 30 because I have moved some of the companies from my small cap portfolio into my quality portfolio, like Audinate, Aussie Broadband, and John's Link Group. Yeah. Not sure if that's a good decision, but that's what I've done. Maybe one or two others as well. SKHA, great video and content as always. Would love a view on Zip after this recent move and sideways action. Problem with being behind by 2 weeks is 2 weeks ago, say the 19th or 20th of June. Let's have a look at the Zip chart. 19th or 20th of June. Let's go back then. Oh, yeah. So at that point, the share price had rallied really nicely, and it's continued to rally really nicely, and it's broken out. We have seen a little bit. We saw a little bit of a dip on Friday session. So the top of this purple rectangle box is a resistance zone, or was a resistance zone. Now it's a support zone, and we saw the share price on Friday test that zone, and we saw the share price rally. So share price went to $1.59.5, and the top of that purple box is $1.59. So there was a nice little test of that resistance now support zone, because that breakout on the Thursday session was pretty strong, really good volume coming through, 2 really good volumes, 2 really good days for Zip. So this would be a breakout, and if I was trading this right now, so I do have a trading position in this, but if I was trading, or if I didn't have any trading position in this company, I would be thinking or looking at this chart going, this could be a good time to, I could even add to my position. No, I didn't even think about that. I could add to my position in Zip because of this particular chart. So it looks really good at this point in time, right now, on July the 6th. Yeah, I'd be willing to add to my position or even take an initial position in Zip. So what I would do, this is what I've been doing now lately, is I take initial position, so maybe a third, and then if I get another buy signal, I add another third, and then another third if I get a third buy signal. That way, if my initial buy signal falls apart, then I sell at a small loss. I think I like that strategy. You build up a position. So I've done that now with a few companies, AGL, Southern Cross Electrical Engineering, and Integrated Research. I've added to my positions as I get a new buy signal. Moto KHY 7506, Melodial is a joke. The market cap is 600,000. It might be even lower than that now, because share price has dropped heaps since your comment. Market cap is 460,000. Share price is now nearly 0.1 cent. When you sent that comment to me, the share price might have been like 2 cents. Now it's 0.2 cents. You can see this is why the chart looks horrible. I've got to get rid of this MA ribbon. No, this one. And there we go. Oh, God, it's terrible. So you would have written that on the 20th of June. Share price, no, it was about 1 cent. It's fallen, it dropped on that day 42%. The previous day to that, it dropped 57%. It was as high as 4 cents. This company, if you haven't heard me talk about this company has done 2 share consolidations this year alone. The last 2 times it did a share consolidation, share price was 0.1 cent. Share price, of course, went up, and then the share price dropped immediately back to 0.1 cent. This is the 3rd time it's happened in a year. 3rd time in a year the share price has dropped back to 0.1 cents. You don't see 0.1 cents on this because share consolidation. And in fact, because of the share consolidation, if you go back to 2021, it says the share price of this company was $200. In fact, $280. It wasn't $280, but the share consolidation, because, it's gone from maybe 10,000 shares. No, for each 10,000 shares, maybe it's now you only own one share. That's a share consolidation. So it may have been a 10 for 1 share consolidation, maybe 100 for 1. I don't know. So yeah, if you owned like 100,000 shares last year, this time last year, you might only own 1,000 shares or 100 shares right now because of 2 share consolidations. The share price has gone back straight back to 0.1 cents. It's yeah. So whoever wrote this, Moto KHY, Melodial is a joke. You can't argue that. There is no argument. Melodial is a joke. Thanks for your thoughts on NNG. Yeah, that company is doing an acquisition. I think is in a trading halt and has not come out of trading halt, I believe. So let's not talk about it. Yep, continuation of voluntary suspension, 24th of June. No reason to continue thinking about NNG. Chandra Chef, thoughts on Megaport? Chart looks ugly. I do know that. Megaport looks ugly. There's me taking a position at 1477. This is more of a longer term position. This is in my longer term hold. Longer term, it's not really a quality company, but I've been trading Megaport for a while now, and I just thought I'll just take a longer term position in Megaport, and then yeah, share price has just collapsed. So if I was trading this, I would not be holding this right now. I would have sold it, and maybe that's my mistake. I should have more been trading this, but I just got sick of trading it, and because whenever they release any sort of quarterly report, share price has risen lately on a pretty good volume, and I just think it's better to hold a longer term position because I think the share price could rally significantly from here. But the chart looks ugly. And I think eventually this company is going to be gushing in cash flow. Say 2 to 5 years, just gushing in cash flow. I think. Ooh, actually, have a look at this. If you just draw the lows here. Oh no! Oh, it's broken through the uptrend. It's not a very strong uptrend, but it's an uptrend. Yeah, the chart looks pretty ugly, and I just think Megaport's more of a longer term play, but maybe I should be trading it. So that could be a mistake on my part. Marian, I bought Droneshield about 2 weeks ago. It is up 20%. Well, you're probably up way more than 20% now. I know you can't give advice, but is Droneshield a long-term investment? Thank you, Maria. IT. It. Are you the monster from that Stephen King story? Maybe you should be giving me advice on a Droneshield. You forgot the E, by the way. Forgot the E. Yeah, I can't give advice. Is Droneshield a long-term investment? That's interesting. I'm just trading it at the moment. The market cap of the company is a lot. So there's a lot of positivity already priced into this company. So $1.5 billion. I don't have the conviction in this company to say I can see how that particular market cap is justified right now for this company. There are tailwinds behind Droneshield, however, and if those tailwinds continue, yeah, maybe that's true. But will those tailwinds continue? Maybe somehow in the next few months we reach some universal peace in this world and all conflicts come to an end. And we don't need drone shields or drones, anything to protect ourselves from drones. Is that likely? Probably not. 1 year return, 747%. The share price has rallied a lot. So I am just trading this. And if I do see any sort of negativity in this company, I would sell my trading position. But the chart looks pretty good. Don't like the accelerated share price increase over the past 2 months. Share price has gone from about 90 cents to $2 in a fairly short period of time. But at this point in time, I've got no sell signal. I think when it comes to whether this is a long-term investment, it's up to you. Do you think this is a long-term investment? And that's when you have to do more and more research. And to be honest with you, I don't want to do that research. And it's a benefit of just trading. You don't have to do that research. And I was listening to a podcast, Andrew Page and Scott Phillips, and So Andrew Page was complaining about when he does Ausbiz the Koi, they don't give him a lot of time to research the company. He says, 30 minutes, it's just not enough time to decide whether a company is a buy or held. And I look at a chart and I can tell you in a split second where a company is a buy or possible sell. So with Droneshield, I'd say just a hold right now. Maybe add to position if you get that signal. Definitely not a sell just yet. But for those fundamental people, it might take him 5 weeks to know whether Droneshield is a buy or sell. And by that time, it's probably too late. Who knows? But thank you, Marion. Ask me, tell me, do you think Droneshield is a long-term investment? Do your research and what have you come up with? I'd love to hear your thoughts. Swimming 11 says, or ask, why is Bret Blundy increasing his stake in City Chic constantly? I have no idea. I've asked myself that same question. I find that really weird. You can see it in City Chic, and he's lost, maybe not lost money. Where is it? There's a lot of, it might be this one, 17th of June. Yep, here it is. Yep, here's one. So Bret Blundy, so this is form 604. If you want to get these sort of announcements, it's called change in substantial holding. And you can just see when major shareholders who have more than 5% holding in a company, when they either add or sell their holding, or if there's a capital raising and they don't buy or hold shares, but their proportion of percentage of shares changes because of a capital raising, they have to give this form in. I don't know who does it, who tells them. Maybe they don't have to tell anyone. Maybe they do it themselves. I don't know how it's done. And so he increased his shares by 3.3 million, vote or percentage owned from 9.9% to 11.3% on market purchases on the 13th, 14th, and 17th of June. So let's have a look at the share price of City Chic. 13th, 14th of June. Well, that's bad timing. It was just before the negative trading update. Oh, gee, what was he doing? So even though Bret Blundy has a really high reputation among a lot of investors, even those geniuses make mistakes, and that's a mistake. He bought just before the negative trading update, the 13th, 14th, and 17th. In fact, on the 17th, the day before the negative trading update, he bought shares. Yeah, it says here, he bought $20,000 worth of shares. Not as much as the 13th of June, where he bought 3.1 million shares, but he bought some. Bought a lot of shares just leading up to that negative trading update. No idea. Is he positioning himself to take over? Does he care? Maybe he doesn't care. The share price has dropped. Maybe he thinks it's a good thing. Maybe he can increase his stake in City Chic. Maybe he likes something. So a lot of people will look at Bret Blundy buying some shares in this company and think, whoa, if he likes the company, I should buy some shares as well. And at this point in time, by looking at the chart, it looks ugly for City Chic. Ugly. Okay. Joseph Ackle, can you please share the settings for MA Ribbon in Trading View? I think I'll have to do this a bit again. The settings for MA Ribbon. I think I did do this, but I'm not sure if I'm going to leave this particular video there. Oh, there's another question about moving averages. Okay. No, I'm going to do some other questions. Some questions that I've just received. Let's have a look. Okay, Philip N5162 says, Readcloud share price rise exaggerated due to low liquidity. Any idea why Okoda keeps dropping? Okay, so two companies here. Readcloud. Let's have a look. Low liquidity. I actually see, we've got a buy signal right there. Look at that. It's not really a buy signal. It's just a crossover in moving averages. We actually see an improving liquidity the last month or so. You can see increasing volume. I'm not sure what's happening with this company. There is a bit of cyclicality. But someone, it could be a fund manager just buying some shares, just mopping up shares. I would not be trading this right now. Yeah, but it definitely, liquidity has definitely improved. In fact, a few days we have seen a million shares traded. You could probably see that if you look at the trade history. You're seeing a million shares traded on some days, 2.9 million on the 19th of June. And if we go back further, it's a really low liquidity. On the odd occasion, we saw a million shares traded in a day, but that was rare. In fact, we saw a period here where, in fact, if you go back from the 6th of July last year, there was not one single day where a million shares were traded until the 30th of January. Now we've seen over a million shares traded in 1, 2, 3, 4, 5 days in the past month. So that alone tells you that liquidity is improving for real cloud. But there is a point here. When there is low liquidity, that can exaggerate the share price rise. That is a benefit from owning a company that has low liquidity. When there is positive sentiment behind the company, when a company releases some good financial news, you can see an exaggerated rise in share price because of the lack of liquidity and the lack of sellers. But on the flip side is also true. If the company releases something negative, the share price can absolutely take a plunge because of a lack of, it's not a lack of demand, but an over supply of shares on the market compared to demand. So that can be an issue. However, in saying that, sometimes when a company does release a negative announcement, it actually can increase the liquidity over time. And the other company was Akoda. Why does Akoda keep dropping? No idea. Okay. So Akoda's chart, let's have a look at that. What's he talking about here? Share price isn't a plan. I don't know what's happening here. So this could be just negative sentiment. So we had the sell signal. This is just me telling myself a sell signal back in April. We saw everything starting to go negative, sentiment, trend, and that was in April. Now the company did release, so their Appendix 4C. Let's have a look. Was this negative? I don't remember this being negative. They did release an announcement on the 16th of May, Future Fleet New Business. Just by the title, it doesn't sound that negative. So let's have a look at the Appendix 4C. I can't remember this being negative. It was not negative. They were operating cash flow positive. Not as much as maybe the market was hoping for, but they were positive. Not only operating cash flow positive, they were free cash flow positive, albeit by a small amount, but it's still positive. So obviously, maybe portions of the market didn't like this particular Appendix 4C. Maybe there's a bit of seasonality there. They released this on the 29th of April. So let's go back to the 29th of April. No, in fact, share price rose on the 29th of April by 5%. And then the next day, share price rose 14%. So there was, in fact, some short-term positiveness out of their Appendix 4C. And there was actually some increased volume on the 29th of April. So it's just, and what's happened, share price rallied on the day, the share price was already falling. So there was too many holders who bought at high prices, who saw the rally and went, oh, it's time for me to get out of this dog. So I'm just thinking this is just negative sentiment. This is just noise, negative sentiment driving the share price down. And to that point, who knows how low the share price has to fall. All right, so that's a code up. I won't talk about OnConsul. I have heard about that. Bruce and Dale using Tiger free technical analysis. What the hell is that? Tiger brokers, is that what you mean? I have no idea what Tiger free technical analysis. So tell me what that is. I'd love to know. Okay. I think I might end it there. yeah, I think I'm going to end it there for today's video. It's gone almost 1.5 hours, so I think that's a good time to end this video. So if you do have any questions, any thoughts, any ideas, any insights, anything at all, just leave those in the comment section of this video or any other video of mine you can find. And eventually I will get to that particular comment or question. Anyway, so that's it for this video. Have a good day. And don't forget, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for the video. Have a good day. Bye.